Brian Shannon from alphatrends.net. Today is Friday, the 5th of August, and for the week, equities were pretty much up, and you can see that the Nasdaq was the leader of the big ones, led by the semiconductors, as we typically see here, and biotechs were the bigger gainer with a 6% rally. Um, Oil lost some ground. That's good to see. Energy stocks, of course, that means they were weaker as well, and Bitcoin had a tough week. So let's take a look at the action here on the chart. We're starting here with a 15-minute time frame. You can see up in the upper left-hand corner, it always says right there the time frame that we're on, and this is the 5-day moving average. So here we can see that we're kind of turning sideways, and that is reflective of the 0.35% gain. You're just kind of correcting through time, and that's a good thing as long as we hold on to our gains. We are above the volume weighted average price, anchored to the March 29th high that we've spoken about several times. And it seems as though this market wants to go on to break out beyond this level and perhaps test the year to date volume weighted average price. I would be highly skeptical. Basically, when the market starts turning positive, you go along with it. The more it gets extended, the light kind of turns yellow. You're just gunning it through the stoplight and hoping that a car doesn't come out of nowhere and hit you. Maybe it's not that extreme, but it can be to your wealth, in that you're kind of running at the edge of that risk reward parameter as you get up towards these levels. Doesn't mean it can't continue higher. Maybe it goes on to the 200-day moving average, but we're using up a lot of the fuel here to continue with the car metaphor, and we're maybe running on fumes as it gets here. Otherwise, maybe we're just refilling the tank and getting ready for another push that would be more sustainable and something that goes on like this. That's certainly possible. My bias is always built on what I see on the intraday time frames and in relation to the 5-day moving average. All week, I've given the benefit of the doubt to the buyers as we have been above the rising 5-day moving average. And this morning, when we saw that the numbers came out, the market gapped lower, the employment numbers, that is, unemployment, we gapped lower. We held above the volume weighted average price from the Fed meeting, and we are in this little range. So next week, I think you continue to give the benefit of the doubt to the buyers as long as we're above 408. But, as we progress through the week, maybe Monday into Tuesday, the 5-day moving average, we're going to be getting rid of this data over here. So that 5-day moving average is going to start to look like this. So if we get below this and stay trapped below it, although I'm saying give the benefit of the doubt to the buyers above 408, if we start to see the 5-day moving average turn lower and we get trapped below it, then we want to be on the lookout and be aware that we could be in for a deeper pullback, perhaps down to the volume weighted, one of these two volume weighted average price levels. First, from the low that it's seen this year, and then from this second handoff point. So these are potential levels that if we get weak, keep an eye on 402 and 398 in the S&P 500. What you'll see on the daily time frame is that that 20-day moving average will be coming up to meet prices at that level next week, as they, even if the market goes lower, the 20-day moving average is going to rise because we're getting rid of data from 20 days ago over here. That 50-day moving average is also rising. So, the jury is still out about the bigger picture because we have the 20, 30, and 40-week moving average. But this is the time frame to trade on for me, so I really don't care too much about this bigger picture. I'm aware of it, but it doesn't really influence whether I buy or sell. It only might impact, how aggressive I get in a long or short position. If you're watching this on YouTube, please give it a like, subscribe to the channel, etc. If you only look at it on YouTube, you're missing a ton of information that I put out for free every day on Twitter. Alpha Trends, twitter.com/Alpha Trends. Go check it out, or at least go to alphatrends.net and sign up for the free weekly email where I put a lot of links in for that. Anyways, the Nasdaq also held above this prior little band of resistance, and it's held here today right at the week to date. That's that blue volume weighted average price. So same story here. Next week, if we start to see some weakness, I think that if we came down to the VWAP from the Fed and then bounced up, but then got trapped under the 5-day moving average, well, what we would want to look at are, again, volume weighted average price off of that low from this anchor point, and from this anchor point is basically the Fed anyway. So I think you have risk down to about 308 initially. And when we look at the daily time frame, what do we see here with this 20-day moving average? Well, we see that, if it continues its rate of ascent by Thursday or Friday, it'll be at about that 308 level. What else is at that 308 level? We've got the volume weighted average price anchored to the April 29th high, which had been resistance initially. So it will have the opportunity perhaps to flip to support down in that area. So in other words, if we pull back down towards 308 on the daily time frame, we would have the 20-day moving average, and we would have the volume weighted average price anchored from the March 29th high. Those two things together would provide the potential for support. And then we also have this volume weighted average price that has the potential to provide support. So 308 is going to be an important level on any pullback in the Nasdaq. Now, the Russell 2000, I'm not sure if it made a higher high here today. That was 190.94. This high was 190.102. So we beat it by 8 pennies. It looks like, again, that year-to-date volume-weighted average price is clearly within range still. And, we opened lower. And where did the buyers emerge? Right at the 5-day moving average, right at the week-to-date volume-weighted average price, just above the volume-weighted average price from the Federal Reserve. We could, add a trend line that looks, oops, that's not my trend line. We could add a trend line that looks like this, and maybe that's important next week as well. Back to the Nasdaq, I do have a trend line on here as well. I colored it blue, just to show that here's another reason that this area might provide resistance in here. Anyways, back to the Russell 2000, and again, you can see Russell 2000 over here in the time frame. This is again the 15-minute time frame. Higher highs and higher lows above the rising 5-day moving average. It's innocent till proven guilty. We're running into this, the light is yellow, and how long will it remain yellow is anyone's guess. But we don't want to turn around and go the other direction because we're still clearly showing higher highs and higher lows. If this market starts to show some weakness, let's look at some similar levels, and then that this prior peak here near 182, 183 is this volume weighted average price. If we go to the daily time frame, is there anything in there at 182, 183 that would tell us that would be an important level as well? Once again, if we extrapolate the rate of ascent on this 20-day moving average, boom, 183, 184. How about the volume weighted average price from the March 29th? 183. So I think that's going to be a key level to keep an eye on in the Russell 2000, 183-ish. So we've got 183 in the Nasdaq. We've got 308. I'm sorry, 308 in the Nasdaq, 183 in the Russell, and 402 down to 398 in the S&P. The biotechs, they did make it past this range and right up to just under that is the declining 200-day moving average. So this market continues to show that we had seen this consolidation. That consolidation was a correction through time, and it resolved itself to the upside with that gap higher on Wednesday. If you looked at Wednesday's video, I'd suggested that it would be reasonable to buy above this level with a stop under here. If you did that, well, then you've got to raise your stop. What's your time frame? Buying right here as it approaches that 200-day moving average doesn't seem reasonable. But if you purchased it, as I mentioned on Wednesday, right here with a stop under there, well, now you can take partial off. You can raise your stop on the balance. Worst case stop, I would say, would go to break even. There's no reason to allow a winner of a couple dollars like this, especially when it's extended in a longer term decline. If you catch one of these counter trend rallies, you don't allow them to turn into a loser. Financial stocks, I mentioned on Wednesday that at this point they look on Wednesday they look very similar to what the S&P looked like right here on this day. So we'd seen the pullback. And now we are starting to maybe bounce a little bit. I also mentioned I don't trade financials. I think that they trade funny. I've lost money in them in the past. I don't trade them well. So I think they look bullish. If you agree and you want to trade these things, then you should. But, just because I talk about it doesn't mean I'm going to trade it. I just simply point these out for people who are interested. But definitely be aware, as I also pointed out, the volume weighted average price off that March 29th high was important, very important for this market. And will it be again? We'll see. Energy names, as mentioned, they came right up to where they were supposed to. That declining 50-day moving average in the March 29th volume weighted average price, and now they're pulling back and trying to stabilize near the 50-day, I'm sorry, the 20-day moving average. And when we look at the 30-minute time frame, let's just clean that up and let's go over here. Where's the volume weighted average price from the low? Well, today we dipped below it and then we closed above it. So perhaps we begin to stabilize in here. Is this anything important previously? I mean, you kind of had some resistance here and support for a little while. I don't know. They're still below the declining 5-day moving average. If you're looking to buy these, don't buy the dip. Buy strength after the dip. Wait for it to get back above that flat to rising 5-day moving average.